Hello, Oracles. Well, we were a little bit on the green side of flat today. Nothing super exciting. Tesla was up 1.6%. NIO was up 6%. Affirm did drop a bit because Apple had announced that it has a new payment format that's coming out, which is going to rival Affirm. So Affirm saw a little bit of a tank, but honestly, Affirm has been beaten down so much this year. Does this little bit extra even matter? So all in all, it's kind of like the calm before the storm. You know, with CPI data coming out on Friday, I don't think there's going to be a lot of moves going on this week. You know, as we had talked about before, it's probably going to be a bit of a roller coaster ride similar to what we saw today. And then I think when it comes to the CPI data, as soon as we get that, that's going to determine which way the market is going to actually go for the entire week. Because if we come in under expectations, we'll most likely see a nice green finish to the week. If we miss expectations, we're probably going to finish red. And when it comes to CPI, we are looking at a forecast of 8.3%, which is what we had last month. And if we come in at 8.3, that's going to be flat and even with last month, which we had 8.5 back in April. So this might be still that continuing inflection point down. While we have seen oil and gas prices going up recently, that wouldn't be reflected until next month, but we did see the prices going up over the course of this whole last month of May. So if we do come in 8.3 or lower, I think that's going to be a good sign that we're still moving in the right direction, despite the fact that we have oil and gas prices going up. Now, a lot of times the Fed is going to look at the core CPI, which is all of the inflation excluding energy, which would include oil. So again, we just want to see this, and then month over month is going to be a big one too. I'm still looking for the month over month numbers for expectations. So if you guys know them, let me know in the comments below. I just haven't seen them yet. So looking at where we're headed, as long as we're trending flat or down, I think that's going to be good. Flat, not great, because obviously that means that inflation is still high. So we want to make sure that we're coming down, and this could determine how the Fed's going to play things out. Now, looking at Cathie Wood and Piper Sandler, talking about how inventory levels are so high, in order for companies to deplete these inventories, they're going to have to lower prices, which in turn is going to bring inflation down. So if their sales are going down because consumers are spending less, then they're going to have to lower their prices. But if consumers are going to continue spending the money as they have been, that means that the inventories might not come down. So a lot of different pieces in play right now. So again, the biggest piece we're going to look at is inflation and CPI data. If that comes down, great sign, we're moving in the right direction, but are we moving fast enough? Now again, this could hit a tipping point real fast, because if the Fed goes too hawkish and decides that, maybe 50 basis points isn't enough, maybe they're going to do 75, or maybe they're going to do 50 this month and then 50 again in July. If they go that high that fast, and then in turn, consumers all of a sudden stop spending money, and then inventory levels are high, so retailers start dropping all their prices, the two of those together could create a massive flip, which then in turn can cause the Fed to go a lot more dovish and flip from that hawkish to dovish very quickly. That could be very good for growth stocks. So this is just a lot of key pieces of information that I'm following along the way. And as I'd spoken about many a time in the past, where I'm trading right now, and I'm not a trader, I'm more of an investor, but the way I'm just kind of following the market is more of it's kind of day to day and data to data. And because it's every single time we get another piece of data, all right, this is the next piece. What does this piece tell us for the way the economy is going to go in the future? And you really have to take it step by step. That's what the Fed is doing right now, but they of course have a lot more information to absorb than we have here. So they're taking little pieces at a time just to see, all right, well, this is the move that we made. This is how things are getting changed and affecting. And from what it seems like right now, it seems like the Fed is kind of just pausing and saying, well, the plan that we put in place is what we are going to be sticking with. And they're going to be holding probably a 50 basis point hike coming next week on June 15th for the FOMC meeting. And then we're going to be going into July to see these Q2 numbers when it comes to earnings. And when we get the June CPI data, then we can really see, all right, how is the Fed going to play things out for the FOMC meeting on July 26th and 27th. That's right at the beginning of the Q2 earnings season. So again, all of this uncertainty is just how the market plays out. I'm guessing after election time, we're most likely going to see a little more clarity. I think there's going to be more certainty, so we're not going to be totally in the clear by then. But, we'll have a lot more information down. We'll see really where inflation is going. Interest rates are going to be significantly higher at that point. We'll see how those interest rates are affecting inflation. The midterm elections will be over, so we'll know what administration is going to be going forward. So I think come mid-November, we're probably going to see a huge sigh of relief, even if we're not totally in the clear. Even if we are in a recession at that point, I still think that we're going to see just a sigh of relief from a lot more clarity of what's going on in the economy. Because again, even if we know, all right, who's going to be in charge of Congress and the Senate, we're going to know, what's going on. Are we in a recession or not? What is inflation going to be at that point when we're looking at possibly most likely a 2% interest rate? So all of these answers we'll have at that point in time. So even if they're not great answers, they're still answers. That's what the market wants, is answers. And right now we have more questions than answers. And that's why we're in this bear market limbo of nobody knows what to do. Should we, sell off and wait till the bottom drops out of the market? Should we dollar cost average? Should we buy now because we maybe hit a bottom? All of these questions are all because there's just so many questions in the economy right now, so many questions in the market. What is happening? And so all of these questions should have answers, good or bad, will have answers come November. So I think November we're going to see that sigh of relief. Probably not like a real good bull run coming at that point, but we'll probably see some nice green times to finish the year off. And then at that point, we'll start having those questions of, okay, now when is it going to be when the market's truly going to rebound and come back? When are we going to pull out of whatever negative atmosphere we're in at the time? And these are some of the great conversations that we've been having in the comments about, what is the strategy to do right now? And honestly, because there's so much uncertainty, there's a lot of great strategies that could work. You just don't know what could be the best strategy until we actually get to that point, and then it's just hindsight is 2020. My strategy, for those of you who don't know, is just dollar cost averaging. Most of it is into Tesla. I add every single day. If we drop a little bit more, I add a little bit more. That's how I'm playing this because I don't know what the future is going to hold. Some of you out there have said, you're anticipating a significantly larger drop in the market, so you've got a cash pile on the side waiting to add in later when we drop further. Some of you are also doing the Warren Buffett style dollar cost averaging, which is you have this stockpile of cash, and as you see great buying opportunities, you throw a little bit in there, but you're still holding a majority of cash on the side. And then others of you think that maybe we have already hit the bottom, and maybe 620 was the bottom for Tesla, and now we can start clawing our way back out, so you're going to dollar cost average on your way out, and if we do get another dip on the way down, you'll add more. Honestly, I'm not a financial advisor. I think all of these strategies are viable strategies if you guys have done the research on your own and feel that this is the best strategy for your portfolio. I can't tell you one way or the other whether it's good or bad because nobody knows what the future is going to bring. So again, we'll track this back. We'll look 6 months down the road when we hit November and we'll say, hey, let's look back and see. To me, this is more going to be a learning experience because by dollar cost averaging, if we do crash, I know that I'm not going to have the lowest cost basis that I could have had. But I will, in turn, bring my cost basis down, so when we do turn around, I will have a better opportunity to be profitable in the future because I will have a lower cost basis. Now, conversely, if we don't go any further down and we have hit the bottom, my dollar cost averaging is still going to be beneficial for me. And either way, it is a learning experience because these cycles usually come around every 10 years. Look at the past history, that's normally how it happens. About 12 years ago, we had the great recession with the housing market crash. 10 years before that, we had the dot-com bubble crash. So usually happens about every 10 years. So I do plan on investing for at least 10 more years, God willing. And so in doing so, maybe I don't make the best decisions right now, but I can then in the future, when we hit another scenario like this, I will have the knowledge and wisdom to be able to invest more wisely at those times to be able to do better the next time around. And so any gains that I may miss out on this time around, I will consider the cost paid for this wisdom that I'm going to be gaining. That's really it. So I may not gain in my portfolio, but I will gain in my wisdom. And I gotta tell you, wisdom is priceless. So let me know in the comments below what your strategy is. Again, you and I have talked, many of us have had conversations in the comments about this, but what do you think the next 6 to 12 months is going to look like playing out, and how are you going to be strategizing yourselves and your portfolio to be able to maximize your benefits over the next 12 months? And let me know in the comments as well, how many of you went through the housing recession, and how many of you went through the dot-com bubble, and how did you invest during those times? Because your wisdom can be shared with all the rest of us so that we can all learn and try to trade better in the future. And on a side note, just because I was curious, I've been trading fractionally in SoFi, and I really wasn't sure how the splits were going to affect fractional shares. So I've had literally $1 in Amazon stock just waiting for this moment today to see how it was going to go, because some brokerages will sell off the fractional shares and just give you cash, while others will actually split it for you. So in case you were wondering, at least as far as Amazon went through SoFi, it split it. So I got my split, so it just multiplied my shares by 20, and that was it. Again, the value does not change, the dollar value stays exactly the same, but my shares now were split. So if any of you had questions about SoFi, that answers that. I now have Google coming up next month, and then of course we'll have Tesla, and we should be getting the proxy for Tesla any day now. Literally, it should be coming out any day. We should be getting that information. And again, I don't know if we're going to get the specifics on the split, but we should be able to at least get the number of shares that we're looking to issue and vote on for the split. So when we get that information, I will of course break that to you as soon as we get it, as soon as I can. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord channel. That link is in the description in the chat below as well. And if you would like to support the channel any further, I am over on Patreon. That link is in the description. I've been adding some information over there, like my investments and the income that I have coming in, how I invest that. I'll be sharing over there all of my price targets through 2032 also. So if you want to jump on over there and help to support the channel, I'm trying to provide as much information there as I can to benefit you guys. Thank you all so much. Have a great one.